Is another major move coming here. Let's take a look at what the options market is saying. It is Sunday, August 10th, 2025. We're going to take a look at dealer positioning going into this week. We'll look at OPEX Friday, SPX, and going to do a couple of things here. First of all, if you like the video, helps out the channel, helps me out. Also, come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Let's get into it here. So we had a nice rebound this week. Couldn't close above 6,400, but we did get back to that, and we had a nice bounce from that little 2-day sell, which had some volume behind it, and it resulted in a weekly engulfing candle. But we're going to take a look here at dealer positioning going into next week, and we'll just get right into it here. So if we take a look at next Friday, and I'm not even bothering to look at Monday, we're just going to look at next Friday for now. We'll talk about this upside risk here that has been kind of sitting there, and it's definitely gaining. So we definitely got some volume at the 6,500 handle, and you can see it's not our, it's not the largest strike yet. It does have a massive tail there, but the open interest is really starting to gain on 6,400, and if this converts, we could be looking at a break finally of that 6,400 handle. That might require news. We've talked about peace deal. Trump, not coincidentally, is going to be meeting with Putin in Alaska. Guess when? Friday the 15th, which is the day of OPEX. So we could be looking at some fireworks here. If we take a look at the spiders, it's a little less open interest up there. Obviously, SPY is a little bit different than the cash S&P, but you do have quite a bit of call interest. We didn't have the volume there, but we do have the tail. We do have the call interest. For the Qs, it looks like right now, at least as of right now, we'll actually zoom out a little bit because the Qs are more volatile. It looks like 580 is it for now. Now that can change this week, but 580 does seem to be a little bit of a cap. So we are seeing that kind of upward pressure here. I think a lot of people front ran that decline last week, and again, technically you had a sell signal. You had the high volume reversal, you had the engulfing weekly, but if you went short here, you're not risking a lot. So I can't fault anybody for taking that trade, but at this point, we could be, sometimes these distribution patterns, they take time. Here we had to make 2 new highs, right? It took a little bit of time. Sometimes you got to stop out those early shorts. And I keep seeing this pattern of, it's a lot of, personalities, a lot of, just on the internet trying to front run, a sell here. And that usually doesn't work out too well. With Apple breaking out here, I want to point out the Russell. So we've been looking for a Russell to kind of like catch up here and kind of confirm. I would love if we could get a peace deal and get the Russell to break out to kind of get like short seller capitulation for a top. But I bring this up here because, again, we've talked about this 225 area, and it has gotten rejected there, right? But it still has higher lows every single day, and it's right back, beneath it currently. If you look at the RTY, technically, all it did was back test this breakout from late spring, and you have a mini little bull flag starting to build there on the daily. I bring this up in conjunction with Apple because there is a ton of call sellers on Apple. We highlighted this for weeks, and we said we were going to go to 230, and it went exactly right there. This is all dealer based. We looked for 230. I thought it would get there next week. It got there in 3 days. But once that level was broken, you can see the 200 MA probably forced buying there as well. But my point is a similar setup here. 215 resistance this whole way. Higher lows the whole way. The Russell looks very similar. Now to flip over here, this has been a theme. And one thing I've learned about these dealer levels is if there's a level that just keeps coming up and doesn't go away, it's probably there for a reason. 230 has been highlighted on IWM for a while, right? So we knew that 225 was a resistance, a week or two ago. It ended up holding, but now we have higher lows. And we closed the week above 220. So we can clear this. Obviously 225 is a headwind, but I'm seeing a very similar setup from a technical standpoint as Apple to the Russell. And again, it's not a guarantee, doesn't have to play out, but it does seem like this market is poised to do that. And obviously, if the Russell goes higher, it's the most risk on type index, S&P probably will make a new high too. So that's the risk that we're looking at right now. I would assume generally, 6,300 just in the short term is going to be a little bit of a gamma flip. 62 was defended on last Friday. So, those are your lines in the sand here in the short term. But if we get any sort of positive catalyst here, we could be looking at that final kind of, euphoria moment where shorts finally have to give up. Just seeing a lot of front running of this seasonal decline, and I think that's part of what's keeping us so buoyant right now. So anyways, guys, I'll wrap it up here. We'll keep it short and sweet. Sunday night video. You guys take care. Come find me on carnivoretrades.com, and I'll see you guys all on Monday.